Hi guys, Will here from WB Trading and welcome back. If you're new to the channel, please do hit that subscribe notification and tap the bell icon so that you don't miss any of the free content I share with the trading community here on YouTube. So today I'm actually going to share potentially a source of edge with you all, and this source of edge, to begin to go into more detail, is built around trading against other traders who are reacting to, or in fact to be more accurate, who are getting trapped as they execute trades based on basic chart patterns or classical chart patterns, i.e. the one you're seeing on screen right now. So let's take a look at what's happening. We're seeing this formation of a pretty damn obvious triangle pattern, and we're seeing price begin to compress, and then towards the end of this compression period we're seeing price break out. Now, for retail traders who are looking at this, they're literally piling in short as this happens, and don't get me wrong, trading with the break of a pattern like this can work and does work on some occasions, especially when confirmed alongside an increase in volume, but you have to watch price. You have to keep an eye on price and not just blindly sell into a pattern like this. And in fact, in most cases, as ever, trading against the majority tends to offer the most profitable source of edge. Now, let's take a look at what happens in the minutes following this break on increased volume. So what we're seeing next is a slow grind back into the triangle, and all of the traders who've just got short are most likely thinking, oh, that didn't go too well, did it? No follow through on the move whatsoever, but hey, let's hold the short. I'm sure it'll come good. It's a pattern from straight out of classical trading books. It has to work, doesn't it? You know, I'm following the rules of the pattern. You know, everybody says, look for a pattern like this. When a break occurs, trade with the break, you know, done deal. And if we take a look at volume here, again, what we're seeing is indecision and overall price clearly proving anyone who got short to be wrong. So in any circumstance, let's say that we took this trade, we got short, we've just been proven wrong, we should really get straight out, cut the loss, accept that we're wrong, and just move on, look for another trade. But retail traders don't do things like cut losses and move on. You know, your average, perhaps lesser educated trader holds losses, won't accept they're wrong, and this is where psychology comes into play. And again, understanding these things is part of a larger source of edge that is here to be had. Now, let's quickly summarize what we've seen happen so far. We've had an obvious triangle pattern that's formed on a 1 minute time frame. Retail traders will be looking for a break and they'll execute on it straight away, most likely without any real confirmation. More educated traders will most likely monitor price, monitor volume, and will probably aim to trade against the majority, knowing that doing so, alongside an understanding of the way that most other traders are thinking, actually provides edge. So let's take a look at what happens next. So retail are trapped short, and as such, when they exit or get stopped out, they then need to buy back their positions, which causes price to whipsaw back in the complete opposite direction, providing a pretty profitable trade for anybody who was clever enough to trade against the majority. So there you have it. I spotted that and watched it play out live earlier on last week, and I just wanted to share a different perspective and perhaps a potential source of edge along with what I was looking at when I saw this forming. You know, it can be really useful to see things like this actually play out and be able to skip through the stages so that next time it happens, you know, you'll be able to wait for price to confirm, wait for volume to confirm, and just think about what the majority are seeing, you know, because as we all know, the majority are more often than not wrong. Now, before we draw this video to a close, I just want to quickly share a quote from a book called The Taylor Trading Technique, where Taylor says, by identifying moves in the market that might fool less savvy traders into buying or selling at the wrong time, X system may protect against the pitfalls of this, whilst giving you an edge over other traders. And this book was actually written back in the 1950s. So, you know, trading against other traders and looking out for these points within the markets where most traders get it wrong and then trading against them, it's not a new concept. And it's been proven to work now for decades. So just be aware of the above, and hopefully this video will help you to begin to understand the concept in more detail via the example that we've just covered. The main point I want to make here is this. Again, the majority are typically wrong within trading, aren't they? And with that being the case, if you spot something blindingly obvious like this, I'm not saying don't take the trade, but I'm saying be aware of both sides of the coin. Monitor price, again, monitor volume. And if you do get it wrong, just get out of the trade. You know, we all get it wrong from time to time. But there is edge in trading against the majority, in trading against traders who are trapped. So just bear this in mind for the future, because on a day like today, doing so bags you a really brilliant trade here on DAX. If you do have any thoughts or questions on any of the above, please do visit the comment section below the video. It would be really great to hear from you. Please do subscribe if you haven't already. And as always, guys, trade with edge, with consistency, and I look forward to having you back here on the channel soon. Thanks, guys.